Welcome to our VAT learning series, which gives an overview about the VAT laws in the UAE. The first session gives a broad outline of the VAT laws which are applicable from January 2018. VAT or value added tax is an indirect tax charged on the consumption of taxable goods and services. A simple VAT process flow consists of end users who pays VAT on taxable goods and services, the businesses who collect VAT at various stages, and pays to the government. Coming to a practical scenario, let's say a supplier sells raw material for AED 1000 to the factory. The supplier collects 5%, that is AED 50, from the factory and pays it to the tax authority. The factory then processes the raw materials and sells it to the wholesaler for AED 2000. He collects 5% VAT, that is AED 100, from the wholesaler, and he pays the net amount, that is 100 minus the 50 which he paid on the purchase to the tax authority. Sells the goods to the retailer for 83,000 and collects dirhams 150 from the retailer as tax. Again, he gets a credit of 100 dirham which he paid on his purchase. The retailer sells it to the end user for 85,000 and the tax collected is 250 dirhams, which is 5% of the selling price. Since he paid already 150 on his purchases, he has to pay the net amount of 100 to the tax authority. Here you can see the government gets 5% of the final selling price, which is 5,000, but it is collected in various stages. This is the essence of VAT. VAT law is applicable from January 2018 and a standard rate of 5% will be applicable on all the taxable goods and services. Now, coming to the most common question among the business community, am I required to register? The answer is yes if the total taxable supplies exceed 375,000 in a year. What are the major VAT related responsibilities of a business? First thing, they have to register for VAT. The registration is expected to open by mid-September. Then they have to maintain proper accounting records, and this has to be maintained for a period of 5 years. They have to charge VAT on chargeable goods and services and issue tax invoice. File quarterly returns within 28 days from the end of the quarter and pay the collected tax to the authority. Now, coming to a few specific sectors, the supplies of commercial properties are taxable and residential properties will be exempt generally. Insurance, except life insurance, will be taxable. Uh, Industry-wise implications will be presented in the coming sessions. And these are the zero rated and exempt categories. VAT is payable on the value including customs duty, and VAT is due on imports using reverse charge mechanism. Budget relief is available on the amount of budgets written off, subject to the conditions and limitations specified in the legislation and the regulations. VAT is currently applied in almost 166 countries around the world. Taxation is something new to the businesses in UAE and it can create some confusions in the initial stages. The lack of familiarity with the VAT rules and regulations, especially related to the specific industries, the availability of knowledgeable and competent staff, additional compliance and record keeping requirements can create some initial hiccups for the businesses. They should also plan their cash flow as the tax collected has to be remitted at the end of every quarter. The recent tax rules specify businesses can appoint tax agents to act on their behalf on tax matters with the authority.